The exercise files for today's course are located in the video description below. Don't forget to like and subscribe.
Welcome everyone to Learn It's Microsoft Excel for Finance and Accounting Part 4. My name is Elissa Smith and I will be your instructor for this course. I come to you with over 25 years of experience teaching people like you how to maximize their skills in platforms like Microsoft Excel. Now in this Part 4 of the course, we're going to take many of the things we've learned in the first 3 portions of the course and build our own financial and accounting statements with those skills. We're going to start by setting up income statements and balance sheets. We're also going to look at how to create income statement forecasts and even create statement cash flow statements and debt schedules. So join me. Let's get started.
Looking to support our channel and get a great deal? Become a member today to unlock ad-free videos. That's right, your favorite courses without a single ad. Interested in a specific video? Purchase one of our ad-free courses individually. Looking for even more? Gain access to exams, certificates, and exclusive content at learnitanytime.com. More information can be found in the video description below.
Hi everybody, welcome to this lesson where we're going to look at how to create a rate of return sheet inside Microsoft Excel. Now first of all, what is a rate of return? It's going to allow investors and business owners to assess the success or failure of an investment by quantifying the percentage gain or loss over a specific period of time. So it provides a standardized metric for comparison across multiple investments and asset classes. The idea is that when you compare the expected or historical rates of return, you can make informed choices about where to allocate your capital in a business. Now for us, we're going to be looking at how to calculate single period return, or what's called HPR, holding period return. And again, this is an acronym you will see. The idea with HPR is it calculates an investment's total return over a period of time, like a day, a month, or a quarter, or a year. We're going to be doing a year's worth, a couple of years actually, based on month. Now for this, you need some historic data. A great place to go to get that is from Google Finance. That's where I will get my data from for the next part of this lesson. If you don't want to get your data from Google Finance, feel free to just use the provided data that's available inside, again, the exercise files. If you open up the file called Rates Calculator number 1, it will provide you with the data. But the thing we're going to do next is actually go to the Finance Yahoo site and show you how to download data of your own for really any kind of company that has stock available. So let's go ahead and do that next. So I've traveled to finance.yahoo.com. You can do this in any browser. And now I'm going to come up to the search bar and actually look for either the stock initials or, again, the name of a company. We're going to use Disney because it's pretty safe. You'll see right here that you can actually see the stock symbols or abbreviations, and then you can actually select the one that you want. This will take you to a page specifically about that particular organization's finance data. What I'm going to do after I travel to that is come to the headings at the top and look for historical data. This will take us to, again, more data for a specific period of time. Right here, you can see that mine's doing 1 year. I'd like to change this to 2 years. And I can do that just by clicking right here, coming over and selecting, again, an additional period of time that will increase it to 2 years worth of data. I'll update that. And then when I'm ready, I'm going to come in and download. Notice one important thing to remember when you're calculating HPR is you have to select a period of time. This will allow you to do daily, weekly, or monthly on this site. We're going to go ahead and do monthly for hours, and then we're going to click on apply. This will download the data. And again, when it downloads it, it's going to put it into a CSV file format. All I need to do is select that download file, and it will open it up directly in Microsoft Excel. And that's what we're going to see next. Now, again, if you don't want to do this, go into the exercise files and just get the file called Rates Calculator number 1. It will provide some data for you to use. Hi, everyone. In this lesson, we're going to look at how to actually get the data formatted to prepare it for our HPR calculation. Now, I've imported my data from the Yahoo Finance site. You'll see that it comes in columns. The 2 data points that I really need to calculate my holding period return are going to be date and adjusted close. And you'll see that this does include a close column. The reason I'll use adjusted close instead is because it includes split and also dividends in the adjusted close price. All the other columns I'm going to go ahead and delete. So I'm going to come in and just delete those columns out of Microsoft Excel because we do not need them to calculate our HPR. Then I'm going to go ahead and actually create a column to hold the HPR calculation. In addition to that, I actually want to bring in the other information that I'll need to actually calculate my HPR by creating a little summary area. This will include my average mean return and my geometric mean return, and we'll be using two functions in Excel to do that with. Now, as you're doing these formatting changes, if you would like a prepared sheet where this is already done for you, feel free to go in and open up the exercise file called Rates Calculator number 2. In the meantime, please remember that you know how to format a finance sheet. So feel free to do that inside of this one. And then get ready to do the next part of the activity where we're actually going to calculate the HPR. So I'm ready to actually calculate my HPR, and I finished reformatting the spreadsheet. In my HPR column, I'm going to come to the second, again, set of data for the second month. And I'm going to go ahead and type in my HPR calculation. Now, what this calculation does is it takes the ending value minus the beginning value and then divide it by the beginning value again. So it's a little bit different, but it works. I'm going to do an equal sign and put the first part of the calculation in parentheses because I need it to happen first. So again, I'm going to take the ending value and I'm going to subtract it from the beginning value and close that in parentheses. And then I'm going to use the backslash to divide that by the beginning value again. This will calculate, again, my HPR. Then what I'm going to do is take that and use the fill handle to drag it down to the bottom. Now, at this point, you're going to see a lot of decimals. This is another great keyboard shortcut that you can use inside of Excel. If you do Shift, Control, the 5 key on your keyboard, it will actually take those, and if you highlight them, it will format them as parentheses. So again, Shift, Control, Shift, and then the number 5. This will take them and turn them into, again, a percentage rather than a decimal. And it makes it a little bit easier to understand what's happening in the spreadsheet at this point. The next thing we need to do is figure out the average mean of return for all the values that we just calculated the HPR for. Very simple function, used in Excel all the time. I'm going to click next to the average mean return. And remember, if you want to just have a practice file to use, open up Rates Calculator number 3. I'm going to come in and click in cell G2 and start my average function. I just need to type in an equal sign and then go ahead and use the average function that's available right here. Again, the formula calculate list. Then I'm going to go ahead and click in the first HPR calculation, and I can actually do another keyboard shortcut right here, which is Control Shift down arrow to include the entire range of cells that I'll be averaging. I don't need the closing parenthesis. I can just hit enter and it completes the current average based on those values. Always remember that even though it's a percentage here, if you want to include a couple of extra decimals, you can go up and use the increased decimal depending on the formatting. Now, the next thing we need to do is calculate the geometric mean return. This is another Excel function that's built into the function library of Excel that we'll use to calculate this. Next thing we want to do is make sure that that percentage for our average mean includes decimals. A couple different ways to do this, but an easy one is to right click on our average, go down to Format Cells, and in the Number tab, just make sure to add 2 decimal places. This will give you a little bit more of an average read because remember that it rounds things if you don't have decimals. Now, the final step we need to do is to calculate our geometric mean return. Now, quickly, what is a geometric mean? So the geometric mean is going to be an array or range of positive data. You can use GeoMean to calculate average growth rate given a compound interest with variable rates. It works great for what we're trying to do. It is an array formula, so it's best used with Excel 2016 or higher. Keep that in mind, but there are keyboard shortcuts that will allow you to use it in older versions of Excel. Now, the first thing I need to do is click in the cell that will put the geometric mean return in. I'll click there and type my equal sign and then start typing in the word geo. You'll see again Microsoft Excel's formula autocomplete list come up. Geo mean is one of the formulas there. I'll double click in it. The next thing I need to do is include my range of values that I'll be finding the geo mean for. So I'm going to come in and go ahead and click in cell C3 and then do Control Shift down arrow to get all the values selected. Now, because this is an array formula, we're also going to include a +1 to the end of that formula, so that it will calculate correctly. And then at the end, we're going to subtract the whole thing by 1. Then we'll hit the enter button. Now, again, you'll see that it's formatted as a decimal. So what I can do here to help, again, get it to be formatted correctly is come up, click on the percentage button. And then again, if I want to go in and format the cells to include 2 decimal places, this will give me, again, a more easy to read geometric mean of return. And this, my friends, is how you can actually create your own rates of return calculator inside Microsoft Excel. Please remember, for this final activity, if you want to use the course or exercise file called Rates Calculator number 3, you can use it to help you get a little bit further ahead on the practice activity.
Hi everyone, welcome back. We are ready to start building our own 3-statement financial model from scratch. Now, first of all, what is the 3-statement financial model and why is it so important? It allows organizations to forecast, and it's based on 3 core elements: income statements, balance sheets, and cash flow statements. Now, all of these require that you gather data ahead of time before performing any of your financial modeling. And there are several steps to building a 3-statement financial model. That's what we're going to be doing over the next several lessons. Now, with each of these 3 different financial models, we want to talk about them briefly before we start creating them. The first one we're going to look at is called the income statement. Sometimes it's called the P&L, or profit and loss statement. The income statement shows the revenue a company earns and the expenses involved in its operating activities. So it's basically the difference between revenue and expenses, and it represents the company's net profit for a specific period of time. Another one of the financial statements that we'll be creating is the balance sheet. Now, the balance sheet is usually the first type of statement that people create, but it provides a snapshot of the company's financial position at a given point in time. It shows the company's assets, liabilities, and the shareholders' equity. The third statement that we're going to be looking at is called the cash flow statement, and it basically shows how much cash enters and leaves your business over a set period of time. It begins with net income, and then it goes to net statement and subtracts any non-cash expenses. So go ahead, open up the practice file we'll be using for this. It's called the 3-statement model part 2. It's in the exercise files, and we're going to get started with building our first income statement. Hi everyone, we're ready to start building the first portion of our 3-statement financial model, which is the income statement. Now, there's a practice file you can use for this that will save you a tremendous amount of time. It is called 3-statement model part 2. Feel free to use it because there are a lot of informational pieces that you need to build your income statement, and this will already be provided for you. When you open it up, you'll see that we're building our income statement based on a mail order cookie company. Basically, you put an order in and you get your cookies through the mail. So let's look at the assumptions that I've created so that we can get started with our income statement. As you come in, you'll notice that I have it broken down into 3 major categories. Revenue is in cell A6, and then we have COGS, or cost of goods sold, in A12, and then operating expenses. And then these are broken down into 4 different years. Now, anything that I've assumed is showing up in a bright blue in the cells. This is common formatting in financial modeling, that you put any assumptions that aren't formula-based, that are hard-coded in cells, you put those in a bright blue. So you'll see that under revenue, I have my first category of new customers. Then I have my average order value, then refunds as a % of revenue, and discounts. And we can see those amounts for each of the 4 years on the right. Under cost of goods sold, we have our materials cost to create the cookies, then fulfillment cost. Merchant services would be things like bank and credit card processing fees. Coming down, we have operating expenses. We have HR, so personnel costs, marketing costs, miscellaneous. You always need a little bit of cushion. And then we have depreciation and interest on any debt in the organization. These 2 are marked as other model, and that's important because we're not going to calculate them quite yet. The very final item at the bottom, down in cell A25, is our tax rate. What we've done here is just assumed an average tax rate that is common in the US right now, which is about 22%. We will be using this information in the next lesson to help us actually begin calculating the income statement. Welcome back. We're ready to start creating and calculating our income statement. Now, I'm in a new practice file. This one is called 3-statement model part 3. Again, feel free to use it to help save yourself time. At the top, you'll notice there are some new inserted rows, and then also we've added some new categories that we'll use as we begin calculating the actual income statement. All right, we need to actually calculate our gross revenue. The next part of the income statement is pretty fun because we're just going to be using some of our good old-fashioned Microsoft Excel basic formulas. For gross price, or gross revenue, we need to go in and take the number of customers or new customers times our average order value. Very simple multiplication application. So I'm going to hit my equal sign and go down and take my first new customers, which is cell, in this case, B16. We're going to use the asterisk and multiply that by the average order value. And then we'll go ahead and hit enter. Now this is actually a currency. So after I do that, I'm going to go ahead and come up and format it as a currency. And then I can actually drag this over to the right using the fill handle. And remember, if you get the number signs inside of the cells, just use the double click. You can widen out all the columns, or you could select all the columns and double click and they would widen out. Next, we're ready to calculate our refunds. Now, this is basically just going to be our gross revenue multiplied by our refunds down in cell A18, which is 5%. But a couple changes I want to make briefly. I'm going to come into my gross revenue and remove the extra decimal places that are there. We actually don't need them. Then I'm going to click in cell B7 and start my refunds calculation. Again, this is a very simple multiplication problem. We're going to do a couple tweaks to it. The first thing I'm going to do is hit my equal sign, and then I'm going to come up and click on my gross revenue, which is in cell B6. But I'm going to make it negative so it calculates correctly. Now, the other thing I'm going to do that will make this a lot easier is I'm going to make the 6 fixed reference by putting in a $ in front of it. And again, I can either do this with F4 or I can just type it in. Then I'm going to do my asterisk and come in, and this is going to be down in, again, my refunds amount, which is the 5%. We can see that, cell B18. Very simple formula. I'm going to hit enter. It calculates. Notice if I don't want the decimals in it, I can remove the decimals up here again, but I'm going to go ahead and drag this amount over to the right. Now, the thing I want you to see is that as I drag this, because I put the $ in front of the row, it means that row is fixed. So I'm going to drag it over, and I can also drag it down as well. And this is going to allow me to copy the formula and save a significant amount of time. But again, what is the value of the $ in front of the 6? It's a fixed reference. So what that means is no matter where I drag the formula, it will always be fixed on row 6, which is going to be, again, the amount that's my gross revenue. The next thing that we're going to look at is calculating our net revenue. Good news, next thing is easy. Net revenue is just a sum function. So I'm going to come in, do an equal sign, but before I do that, I'm also going to come up to my refunds and discounts and remove the extra decimals again. We just don't need them. So we're going to come into cell B9, do an equal sign, start our sum function. You can either type it in or use your formula autocomplete. I'll just be summing B6 through B8, and then we're going to come in and hit enter. Again, this is a formula that I can drag over. And while I'm doing that, I also would like to add a top border so that they can see, again, where the net revenue starts. So I'm just going to click on the borders button and go ahead and just add a top border so that they can see that. The next thing that we're going to do is get ready to calculate our cost of goods sold amount. Welcome back. You should be in a new practice file. This one is called 3-Statement Model Part 4. And again, I filled in an additional few rows at the top where we're going to start calculating the cost of goods sold, or the COGS amounts, for our financial sheet. Or our income statement. So we're going to start right here by clicking in cell B12 to calculate our product cost. For this, we're going to, again, do a simple multiplication problem. We're going to do an equal sign. We want to take our net revenue, not gross revenue. So I'm going to go up and click on it. But I also want to do another absolute reference on the row. And a great keyboard shortcut to do absolute references or fixed references is F4. Notice if I hit it a couple of times, you'll see that it toggles between just doing the absolute reference on the column or just on the row or on both. And we need it on the row. This will allow that row to, again, be fixed in place. Then I'm going to come in and do an asterisk, and I'm going to multiply this down below under my assumptions for my product percentage. This is, again, the percentage of my materials cost. Then I'm going to hit enter. And once I get this calculated, I can copy this formula. And the great thing about that fixed reference, again, on row 9 is that when I copy the formula, it allows me to copy it over and copy it all the way down. And I'm using the fill handle to do this. Again, you can also use other keyboard shortcuts, but it really helps to simplify your calculating inside the spreadsheet. Now that I've got those calculations done, I want to add a bottom border. So I'm just going to highlight the cells. Do remember you can use keyboard shortcuts for this, but to keep things simple, we're just going to go up and use the borders button. I'll be adding a bottom border, but anytime you're using the mouse, you are using precious time. And that's why keyboard shortcuts can save a tremendous amount of time when you're doing any kind of financial modeling. Okay, now we need to sum our COGS accounts. So we're going to come in and do a good old sum function. Again, I'm going to click in cell B15. If you want, you can go up and use your auto sum button. Remember, it's on the home ribbon tab. You just go up to the editing group, double check the formula that it's correct. And then of course we can use the fill handle to drag it over. And now we've completed the sum of our COGS accounts. The next thing we're going to do is continue building again our income statement. Don't forget, we need to actually say what this total is. We're just going to come into cell A15 and say this is our total COGS. And again, I'm going to bold this just so that we can see that it's a total amount inside our income statement. Hi, let's continue working with our income statement. We're ready to calculate gross margin. Gross margin is pretty easy. I'm in the practice file called 3-statement model -part 5. So please use it to follow along. We're going to be clicking in cell B17 to calculate our gross margin. All we need to do here is do an equal sign. Now, gross margin is basically your revenue minus your cost of goods sold. So I'm going to go up and click in cell B9 and subtract that using the hyphen from my total COGS or cost of goods sold, and that will calculate my gross margin. After that, we're going to go ahead and do a percent of gross margin. This is basically just going to be our gross margin divided by net revenue. So to calculate our gross margin percent, we're going to take gross margin and divide it by net revenue. The reason this is important, it helps us to know what percent at the product level we're making profit in terms of our revenue. So to do this, I'm just going to click in cell B18. I'm going to do an equal sign. And again, I'm going to take my gross margin and use the / to divide that by my net revenue. And we'll see that it calculates at a percent. And again, if it doesn't format as a percent, go up and click on the percent symbol. The other thing I'm going to do is go up to my gross margin and just put a top and bottom border on this. And if you want to get fancy, you can do the top with the double bottom border, totally up to you. But again, this is something that I can come in and I'm going to copy this over to the right with the formula. Notice this will also include the formatting. And then I'll do the same thing with my gross margin percent as well. Now we're ready to calculate our operating expenses. So what we want to do is start with our cost for HR or personnel expenses. I'm clicking in cell B21 for this. Now what we're going to do is take net revenue and multiply it by our assumption for the percent of cost for HR. If you come down, you'll see that it's 25%. It's down in cell B43. So to do this, I'm going to go up and click in cell B21, hit my equal sign, and then I'm going to go up and click on my net revenue. And then I'm going to go ahead and multiply this using the asterisks. So we're going to go ahead and make sure we get all these amounts correct. So again, equal sign, go up, click in your net revenue, then use your asterisks to get the assumption amount. I'm going to come down to my operating expenses and click on the assumed percentage for our HR costs, which is going to be about 25%. Now we have to remember that to make this easy in our model, I'm going to put the $ in front of the row so that when I copy the formula, it will do as it's already done, make it a lot easier so I don't have to redo this formula for the other operating expenses. Now ways to do that, we can hand type it in or we can use the F4 key again. Just remember that you only need the fixed reference or absolute reference on your row. Then we'll hit enter. Now, again, this is one of those formulas that you can copy. So either using your keyboard or your formula autocomplete, you can use the fill handle to drag it over and then drag it down. And notice again, it's going to be formatted as a currency. The next thing that we're going to do is talk about depreciation. So now it's time to talk depreciation. Now, the interesting thing about depreciation is it represents the expenses of things that have been purchased prior to the time that your income statement's being made. It's calculated using the balance sheet and the CapEx schedules, and we actually haven't calculated those yet. So for the time being, we're not going to work with depreciation yet. So what I'm going to do to represent this is I'm just going to highlight the cells where my depreciation will go. Those are going to be cells B24 through E24. Put them in a light yellow so that later on I can come back and we'll again follow up with depreciation once we get our balance sheet and CapEx schedules set up. Hi everyone, we're ready to calculate our total OPEX or operating expenses, our operating income, and talk about interest. So for this lesson, I'm in the 3-part model - part 6 lesson file or exercise file. Feel free to open it up to use it. We're going to go ahead and start by clicking in cell B25 to calculate our total OPEX. This is a simple sum function. Again, it won't be quite accurate because we don't have depreciation calculated yet, but we'll have it all set up so that once we do have depreciation put in, it will be correct. All I'm going to do is use my fill handle to drag this over to the right to get my total OPEX for each of those 4 years. Now we want to come down and do operating income. So operating income will not be correct because we're still missing depreciation, as has already been mentioned, but we'll get it later on. Operating income is going to be your gross margin subtracted by your total OPEX. So I'm going to do an equal sign, go up and click in cell B17. Again, do a hyphen and subtract that from my total OPEX, which to start with will be cell B25. Then I'm going to go ahead and again drag this over to the right. And remember, interest is basically our debt, and we don't have this calculated yet. So just like I did with depreciation, because this will be coming from another model, maybe right here I'll put that in parentheses just so I don't forget that I still need to get it filled in. This will just be my reminder that this is something that I'll come back and get later. Again, I won't normally have this in bold, but for right now, we'll keep it in bold so I don't forget. And we'll go ahead and highlight it in the same color as I did with my depreciation. In fact, this is a great chance to use my format paintbrush as a reminder that we'll come back and get it once we get our balance sheet and CapEx calculated. All right, we're ready to take on our NI or net interest before taxes. Make sure that you're in the practice file 3-statement model - part 7 for this activity if you're following along with me in the practice files. I'm going to click in cell B31. And exactly why is net interest before taxes important? Well, you got to remember that you actually pay taxes on net income after interest. So it's an incentive to take on more debt. And remember that interest is a protection from taxes in its own way. So to calculate this, we're going to take our operating income and we're going to subtract it from our interest. So I'm clicking in cell B31. I'm going to hit my equals sign, and then I'm going to go up to my operating income and I'm going to subtract that from my interest. Now, we haven't yet calculated our interest, so again, it won't be working yet, but it will once we complete the rest of our balance sheet and our CapEx. So this is something that we'll come back to later. I'm going to copy that formula over, and then we're going to get ready to do our next segment of the income statement. All right, now we're ready to actually calculate our, again, taxes, remembering that because some of things are not quite complete yet, our taxes will be more correctly calculated later. But I'm going to come into the spreadsheet and click in cell B33. I actually want to put in a few additional blank rows here, so feel free to insert a few blank rows. But under my NI, I'm going to go down one blank row and then come in and do taxes. Again, it will be in bold. Then I'm going to come in and remember that your taxes are just going to be your net interest before taxes times your assumed tax rate, which is down under the assumptions section. So here I'm going to do an equal sign, go up and click on my NI, and then come down and multiply that by my assumed tax rate of 22%, hit enter, and then I'm going to go ahead and drag that over to copy that formula to complete the calculation for our assumed taxes. All right, we're almost ready to wrap up most of our income statement. We need to add a few more things. Come into the practice file called 3-statement model - part 8 if you want to follow along with exactly what I'm doing. I'm coming down to the middle and clicking in cell B35. I want to calculate my net income. Now, net income is just going to be net income before taxes minus taxes. Very simple subtraction problem. So I'm clicking in cell B35. I'm going to do an equal sign and take my NI, or my net interest before taxes, and subtract that by my tax amount. Now, to get my net income percent, I need to take my net income and divide that by my net revenue. So again, I'm going to click in cell B36, do an equal sign. I'm going to come up and click in my net income, and then I'm going to divide that by going all the way up to my net revenue. So again, we're looking at net income divided by net revenue, and net revenue is up in cell B9, and then I'm going to go ahead and hit enter. Now again, it will come out as a percentage. So if you don't already have the cell formatted as a percent, go up and click on your percent symbol so that you see that percentage. This again can be drug over on each row so that that's calculated for you. The final thing we're going to look at is our EBITDA. Now, what is EBITDA? EBITDA is a critical private equity metric, and it involves looking at your operating income with your plus your depreciation. Now we're ready to calculate the EBITDA. This is an important cash flow proxy. So what we're going to do is click in cell B38, do an equal sign. This is simply taking operating income and adding it to your depreciation. Now our depreciation isn't filled in yet, but again, we're going to get it ready so that once it is calculated, we'll be able to complete our income statement. So I'm going to go up and click in cell B27 where I see my operating income. This will be using the plus sign. I will add this to my depreciation, which is in cell B24. And again, I can drag this over. Now don't forget that you can finish off by adding more formatting to your income statement, like putting my net income in bold. It's also sometimes not a bad idea to put some of those percents like your NI percent in italics. And don't forget that you've got awesome keyboard shortcuts that you can use for that, like your Control-I, your Control-B. Those keyboard shortcuts will save a tremendous amount of time if you start using Excel a lot in a career. Next, we're going to start building some of the other finance statements that are part of the 3-statement model. Hi everyone, we're now going to set up a depreciation schedule. For this activity, you need to have the practice file called CapEx and Depreciation Schedule -Part 1 open. Feel free to use it to follow along. Now, if you go to the CapEx and Depreciation Schedule sheet, you'll see that we've set it up with some information that I want to briefly describe. In column A, you're going to see that we will show the different assets that we will be tracking depreciation for. These include, for example, in cell A4, laptops, a custom software application in A5, and also some new ovens. Now in column B, we have useful life. This is the number of years that we think these items will be used in the organization. And we have 4 different years here that we're going to be using for our depreciation. Now let's review quickly what depreciation is. It's the cost of an asset over its useful lifetime. It includes wear and tear. You'll also notice that down in cell A13 that our total depreciation includes a term called amortization. And amortization is basically where you're tracking the depreciation of intellectual assets, not a physical asset. So it is part of depreciation. So let's go ahead and get started. I'm going to start by clicking in cell C10, where I want to start by tracking my laptop's depreciation. To do this, we're going to do an equal sign and a simple division problem. We're going to take C4, which we're going to use F4 to make it into an absolute reference or locked cell, and divide that by the number of years that we think it will be in use, which is cell B4, so 5 years, and we're going to hit enter. Now, for the 4 years that we're tracking depreciation, this is the same depreciation we'll take each year. So we're just going to left drag that over to the right, and we'll see our depreciation. Next thing we want to do is come in and track our depreciation for our custom software application. This is a little bit different because notice that we have different amounts for 3 of the years that we're tracking depreciation. So let's start by going to cell C11, clicking there and doing our first year's depreciation. Again, very similar to what we did with the laptops, an equal sign. We're going to click in cell C5. Again, we'll use F4. We'll divide that again by the 3 years that we're hoping to keep that particular asset. Now we're going to come over and I can copy this formula, but notice it includes an additional amount in year 2. So for this particular one, we need to add on that additional amount. So what we're going to do is open up the formula. We're going to add a plus sign. And then we're going to, again, account for that additional amount. So I'm going to do D5, again, making it into an absolute reference, dividing that by the 3 years. Again, another absolute reference so that when we copy the formula over, it accounts for that adjustment. Now we come to the 3rd year, we now have a 3rd year's worth that we have to account for. So we're going to also include it in the formula. So I'm again going to do the same process, adding on a plus sign at the end of the formula, coming in, and this time I'm going to go up to cell E10, or I should say E5, apologies, making it an absolute reference, dividing it again by the 3 years, which will also be an absolute reference. Now, when we get to the 4th year, what's happened is the first year, all of it is already accounted for. So what I'm going to do here in this 4th year is I'm going to go ahead and just get rid of the first year's depreciation and just include year 2 and 3 in the depreciation. And so you'll see here that when I come into the formula, I just want to make sure that the first year's worth of depreciation is gone. And I'm just going to delete it one more time so you can see how it's gone out of the formula bar. And now it will update that depreciation. Next, we need to depreciate the new ovens. So I'm going to click in cell E12 for this, hit my equals sign, and again, it's the same process. I'm going to go up and I'm going to take cell E6, making it an absolute reference, and dividing that by the 5 years that we are going to be having the ovens. And again, this is a formula that I can drag over to the right. Then I need to go through, and in row 13, I'm going to, again, just sum my total D&A, or my depreciation and amortization. So I can either use auto sum for this, or I can use any of the other keyboard shortcuts that we've gotten so used to using, but you can see here how it's just moving each of those formulas over for me. Now, the next thing we're going to do is tie our now totaled D&A back to our balance sheet. So now that our depreciation is totaled, we're going to take it over to the income statement. To do this, I'm going to click on the income statement sheet. I'm going to go to cell B24 where I have my first year's worth of depreciation. And I have that over on my CapEx and depreciation schedule. So if I go ahead and hit an equal sign, I can jump back over to the CapEx and depreciation schedule and create a linked cell to cell C13, which is my year 1 depreciation. And because this is a formula, I can just drag it over. And then, of course, we want to change the formatting so that it matches the other cells that are above this. And then also I'm going to turn off the crazy background color. That was just a reminder, so we knew we need to come back and fix it. Now that we have our depreciation, you'll notice that our operating income is calculating correctly. And also down in row 38, our EBITDA. But we still are going to need to go to the balance sheet to continue the process. So that's what we'll be doing next. Welcome back. We are ready to forecast a balance sheet. And before we do that, I want to look at a basic balance sheet and see the different pieces that go into it. For this activity, you need to be in the practice file called balance sheet part 1. Remember, there's a link to all the exercise files down in the course description. Now, also, I'm down on the actual sheet called balance sheet for this activity, and we have pre-set it up to help save you some time. So let's take a minute and actually explore what we're seeing here. First of all, at the top, notice that this is for the first year that we've been in business, and you'll see that we have cash and accounts receivable. Cash is, again, just the money that's coming into the business. Accounts receivable is basically going to be money that people owe you. For example, invoices that are still incoming. This is totaled for your current assets. Now, we just got done doing a lesson on calculating depreciation. So here you can see this is going to be physical or assets that the company owns, along with cell B10, which is our accumulated depreciation. Notice those two are being, again, calculated for a total net fixed asset. And then we have all our assets totaled in cell B13. Coming down under that, you're going to have your liabilities. This is the money that the company owes to someone else. So first of all, we have our accounts payable. This is going to include money that we owe that can be paid within less than a year. Also, deferred revenue is a little bit different. Cell B18. This is going to be where you've sold a service but haven't done it yet. So it could be like a down payment, but it can't be on the income statement because it needs to be dated when it actually happens. So we're including it in deferred revenue. Then we come down and have long-term debt. This could be loans, all those different things that we owe. Then we have our total liabilities in cell B23. Coming down, we have the equity section. This is a little bit different if you haven't owned a company, but if people have invested in your company, you'll often have common stock. Really, it doesn't provide a very useful number. It's usually based on the original share price that people pay when they come into the company, but it is something that's included. Now, retained earnings are important. This is your net income from your balance sheet. Remember, in this example, we're using some of the numbers are skewed, but that's usually what your retained earnings will be. Then you'll see that this is going to be total to give you your total shareholders' equity. Now down in cell B31, we have what is called our liability and shareholders' equity. It's really, really important to understand that what you're trying to do here is figure out your total assets. Total assets are going to be your liabilities plus your equity. That should equal your total assets. So notice that cell B13 and cell B31 need to equal each other. If they do not, it means you have a mistake, and it's super important that you fix it. Down in cell B33, it's important to always include a balance check. And your balance check, what it does is it takes your total assets and subtracts it from your total liabilities and shareholders' equity to ensure that it's zero, because they need to be the same. So the balance check is just to make sure that your assets are correct. All right, now we're ready to start forecasting on our balance sheet. So go to the next lesson. Hi everyone, we're ready to do a balance sheet forecast. Now for this particular lesson, there is a practice file called balance sheet-forecast. Please feel free to open it up and follow along. Now we've done some basic setup for you. We're on the balance sheet of the workbook. And if you go down to row 35, you'll see that there are some assumptions that we're going to use in our forecast. The first one is in cell A37, our net revenue. And then we also have accounts receivable percent of revenue, accounts payable percent of revenue, and then deferred revenue. Generally speaking, an organization is always going to owe, or someone will owe you. So these are fairly easy calculations to create. Let's also notice that up in columns C, D, E, and F, I've set up that we're going to be doing some 4-year forecasts. Let's go ahead and start with our first one for net revenue. For this, I'm going to click down in row 37 in cell C37, and I need to get this off of my income statement sheet. I'm actually going to be creating a linking formula or a linking cell. To do that, we're going to do an equal sign, jump over to the income statement sheet, and go down to cell B9. This is our first year net revenue, and it's all we need. We're going to hit enter and it will bring it over. Now notice I've already formatted it as a currency with no decimal places, and then I'm going to drag this over to the other 3 cells and it will bring over the net revenue for each cell. You can see it up in our formula bar, and we're ready to head to our next step. Now we're ready to calculate our accounts receivable. To do this, we need to take our net revenue and multiply it by our accounts receivable percent of revenue. This is going to go up in the spreadsheet. So let's start where the formula begins. We're going to go up and actually click next to our accounts receivable in cell C6. We're going to do an equal sign to begin the formula and then go down to our assumptions. We'll take our net revenue for year 1 and multiply that by, of course, our accounts receivable percent and hit enter, and it will calculate up above. We can see it here. Then we can go ahead and just copy this formula over to the other 3 years. You'll see it calculate. And then please remember that in cell B7, that's a sum function, we do want this to come down to the other 3 years. So we'll copy the formula over. Let's go ahead and fix the formatting just a little bit. We're going to remove the dollar signs. So you can just take off the dollar signs by selecting the no dollar signs, and then also remove the decimals if you want, so that we don't have all the extra decimals on everything. The other thing that I want to do as well is I would also like to make sure that the values are the same size. So I'm going to re-update that. And then also let's make sure we still have the decimals in the formatting that way. Then the other thing we're going to do here is we're going to come in and we're going to put a border between the accounts receivable and the total current assets. And to do that, I can just highlight the values up above and click on the bottom border button just to get my formatting the way I want it to be. Next, we need to do our accounts payable, and the process is very similar. We're going to go up, click in the cell that we want to start the formula in. It happens to be cell C17. Do an equal sign, and then go down, get our net revenue again. This time it will be multiplied by our accounts payable, and then we're going to go ahead and hit enter and finish that formula off. We'll just double check it to make sure that it's correct. Again, you need your equal sign. Then we're going to go ahead and select our net revenue and multiply that by our accounts payable percentage. Now we're going to copy that formula over like we've done previously. We'll do the same thing with deferred revenue in cell C18. Equal sign, go down and get net revenue, get that first year's assumption for our deferred revenue, hit enter, and again, we're going to copy that over. And then we also want to not have the dollar sign. So I'm actually just going to go up and copy the format from my accounts receivable. It'll save me having to do the formatting. And then I might have an extra border here that I don't need. If I need to get rid of that, I can. I'll just go up and select the cells. Remember, you can go to your borders button and just say no border. It'll turn that off. And then I'm also going to drag over my formula again, just to make sure that it's totaling that formula for me. And if I don't need this in bold, I can come in and just turn the bold off. And now we have started getting the basic forecast for our balance sheet. There's still more to come, so go ahead and get ready for the next lesson. Hi everyone, we're ready to calculate our fixed assets and accumulated depreciation in our balance sheet forecast. For this, there is a practice file called Balance Sheet-Forecast Part 2 that you're more than welcome to use as you follow along. I'm going to go up and click in cell C9. This is where I will be calculating my fixed assets in my balance sheet forecast. For this, what I basically need to do is take my assets from last year and add them to my total CapEx. This will be found on the CapEx and depreciation schedule. So we're going to start with an equal sign, and then of course I'm going to take my fixed assets and I'm going to add those by going down to the CapEx and depreciation schedule sheet and clicking in my total CapEx for year one. Then of course I can take this formula and drag it over. And then don't be afraid to copy the format of the values up above that you've already calculated just to get rid of the dollar signs. Now for accumulated depreciation, we need to remember that it's negative because it shows something dropping in value. And for this, what I need to do is take my current accumulated depreciation that's in cell B10, and I'm going to subtract that from my total D&A on the CapEx and depreciation schedule. So again, we're going to do an equal sign, start with the amount that's in B10. We're going to do a subtraction and go back to the CapEx and depreciation schedule sheet and select our total D&A, which is our depreciation and amortization that's in cell C13, and hit enter. Now, of course, it's in parentheses because it's negative. I'm going to copy this over. And then, of course, if I want to make sure it has a similar format to what's above, I can go up and copy that format down. Then the other thing I want to do is now I can calculate my net assets now. And that, of course, that formula is in cell B11. So we'll also drag it over. And notice how this amount's staying pretty steady or even in some cases flat. And that's just, again, because things are losing value over time. Let's finish calculating total assets. All I need to do is click in the cell. I am going to update the format just a little bit. We actually do not need that bright format on there. So I'm just going to come in and turn the fill color off. And then of course I can drag this over to the right and it will finish calculating. Now the other thing I'm going to do is take off some of the dollar signs that I'm seeing on some of these fields because we actually don't need them, because these of course are all assumptions. So I'm just going to go ahead and take off that formatting so that it's not showing for something that is not a real value yet. It's an assumption. Then the other thing to note right now is that cash cannot actually be calculated yet up in row 5 because we have not yet calculated our cash flow statement. All these statements need to be done together. So I'm just going to format that so we don't forget about it as we're moving forward in doing this balance sheet forecast. Hi everyone, we're ready to work with debt inside our balance sheet forecast. For this, I have the practice file balance sheet-forecast part 3 open. Feel free to use it to follow along. Now, if you notice up in our spreadsheet in cell B21, we have an assumption of our total debt, but of course we also would like to have a forecast. So down below, we've set up a few additional things that I want you to see in the balance sheet of the workbook. When you go down, you'll see that we have net borrowing. This would be new debt that we're taking on. We also have debt payments, interest rate, and interest payments. Now we have put in 2 assumptions here. Notice that in cell C42, we don't have any new debt in year 1, but we do have $500,000 in debt payments. And then in cell D42, we have $1 million in year 2 of new debt that we're taking on. Now to help us calculate for year 1, we're going to go up to cell C21 and we're going to hit an equal sign. Now we're going to start by taking our long-term debt and we're going to go ahead and add this to new debt. Well, for year 1, that's 0, but we're still going to include it in the formula. This will all be subtracted from our debt payments that are located in cell C43. Then we're going to hit enter. And you'll see here that we have paid down our debt by about $500,000, which is exactly what we want to do. Now, the next thing we need to do is realize that it's very common for us to have more debt as time goes by. So down here, we're going to click in cell D43 and our debt is going to increase to $700,000. And I'm going to go ahead and just drag that over so that it's increased for each of those years. Then what I want to do is go back up to cell C21 where we put in our first year's debt. We're going to drag it over and you can see how that is decreasing over time and maybe going up a little bit in year 2 just because we've taken on more debt. Now this will allow me to go down to cell B23. Now that I've calculated my long-term debt, I can go ahead and take my total liabilities, drag that over, and it will now be calculated. I'm also going to take the dollar signs off of that because of course we don't need it there. And I can use the formatting for something up above to remove that. But I also want to make sure that I maintain the border on the top and bottom of that. So I'll fix that in just a minute. But just remember the formatting that you use means different things. So it's important that you maintain the formatting that you've seen us use throughout the different lessons. The next thing we're going to look at is our common stock. Okay, let's look at our common stock. We're not planning on making any changes to this or any changes to our organizational ownership. So we're just going to take cell, if you notice cell B27, we're just going to reference it over with a formula, and then we can just drag that over. Now, retained earnings. This is very, very important. In fact, it's so important, we're going to highlight it just a little bit so it doesn't get forgotten. What we need to do here is take last year's retained earnings and add that to net income from our balance sheet. If you don't do this, your balance sheet doesn't work. So we're going to go ahead and click in cell C28, do an equals sign. Then we're going to take cell B28. We're going to do a plus sign and we're going to jump over to our income statement and go down to our net income. It's about cell B35 as I recall, and you'll see that it's here inside the spreadsheet and hit enter. Again, this is really critical. I'm going to change the format here in just a minute because we definitely don't want it to have that yellow background on it, but something very critical that you must remember to do correctly. So now we need to figure out some of the debt. For this, we're going to go down to our interest rate, which is currently not filled in, but reasonable interest rate down in row 45, we'll say is 7%. Just make sure that you get it formatted as an interest rate. We can copy it over. And again, I'm having trouble with mine, so I'll fix the format. Then to calculate the interest payments, we just need to take our interest rate and multiply it by our first year of debt. So I'm going to do an equal sign, get my interest rate, which is in cell C44, multiply that by my first year's debt. You can see it's up in cell C21. And then, of course, I can go ahead and drag that over to the right to finish calculating what that interest payment debt looks like. So let's go ahead and get this interest payment tied into the income statement. I do want to come in and just update the format on the interest payment because it's not an assumption there. It's been calculated. Then I'm going to go to my income statement sheet and I'm going to click in cell B29. You'll notice it has the highlight so we can't forget about it. Do an equal sign and then link that back to the interest payment for year 1 that we just calculated. Then I can go ahead and copy that format over, or I should say copy the cell over so that we link it. Then let's get rid of the yellow format there just so that it's turned off. Great news though, we now have our interest payment. It's totally done on the income statement. Okay, so to complete, we need to go back to the balance sheet and finish calculating our returned earnings. So for this, I just need to come in and do the sum function for the cells above, and I can copy this over, or I can just go up and auto sum it, either one, and then drag it over. And just remember that this retained earnings is basically going to be your earnings over time, right? So we can see here how it helps to calculate it out and get it equal. And then of course, don't forget your formatting, right? We always want to have that similar formatting going on. Now, the other thing to remember is that we haven't yet calculated our cash up in row 5. Until we do our cash flow statement, this balance sheet will not equal itself. So you need to remember that it's still not going to calculate. Your balance check will not be there yet. That's what we're going to do in the next lesson. Hi everyone, we're ready to set up our cash flow statement. I'm in a new practice file called Cash Flows-Part 1. Please feel free to use it and follow along. There's a new sheet in the workbook called Cash Flow Statement. We're going to use it to set up our cash flow statement. There are a few things that have already been prepared for you in the spreadsheet, and I want to actually describe for you what they are. You'll see at the top we have our 4 different years, and then on the left in column A, we have some different categories. Net income has been linked in from the income statement. And then you have operating activities, investment activities, and financing activities. We're going to start up in row 6 under depreciation. Now our depreciation is actually over on the CapEx and depreciation schedule. We just need to link it in. So I'm going to do an equal sign in cell B6, click on the CapEx and depreciation schedule sheet, and locate the total D&A or depreciation and amortization. I'm going to click in year 1, hit enter, and it will bring that amount over. Then I'm going to go ahead and just drag it over to years 2, 3, and 4. The next thing is going to be our change in accounts receivable. Now for this, we need to go to the balance sheet. We're basically going to take what was last year's accounts receivable and subtract it from this year's. So again, we're going to click in cell B7 this time, do an equal sign, go to our balance sheet and find our accounts receivable. It's up towards the top. And again, what we want to do here is take last year's and subtract it from this year's. So I'm going to click in cell B6 and subtract that from my year 1, which is this current year, which is C6. Then I'll hit enter. Then I'm going to copy this amount over for years 2, 3, and 4. Now it's very common for this amount to be negative depending on the amount. And the reason that is that people are going to owe us more money as the years commence. Now let's go down and look at our change in AP or accounts receivable. Now for our change in accounts receivable, or I should say accounts payable, we're going to go down to cell B8. Now this is the opposite of what we just did with our accounts receivable. When we look for accounts payable, we're going to take this year and subtract it from the previous year. So I'm going to do an equal sign and head back to the balance sheet again. And this time we look for our AP. So again, I want to take this year and subtract it from the previous amount. So in that case, it's going to be C17 minus B17. I also want you to take note while I'm still on this sheet prior to finishing the formula that if we look at row 18, it's deferred revenue. And that's actually the next thing we need in our cash flow sheet. But before we do that, let's copy this formula over. And you'll notice that as opposed to the change in AR, it's more common for change in AP to be positive rather than negative. Now for our change in the next area down, what we want to do is actually just copy the formula because as I previously showed you on the balance sheet, if you look at row 18 deferred revenue, it's already in the balance sheet right below the AP formula we just did. So we can actually just copy the formula down and it works great. Just remember that you don't want to lose your border below row 9. So we'll go ahead and add that border back on. Okay, to set up our operating cash flow, we need to add all these things together. So we're going to start by clicking in cell B10 of the cash flow statement sheet. Do an equal sign. We need to start with our net income, and then we're going to add that to the total of all of our operating activities. Now to make this formula a little bit easier, I'm going to use a sum function for that portion of the formula. And again, we just need to get the opening parenthesis, drag it down, hit enter. It will remind me that I need a closing parenthesis, which is great. And remember that when we look at our operating cash, this is basically how much the company is making. We can drag this formula over, and now we've completed the first step of setting up our cash flows. We're going to continue figuring out our cash flow statement. For this, I'm in a new practice file called Cash Flows-Part 2. We're going to be down under cell A12. We're going to be bringing in our CapEx information. Now just remember, this is basically investments into fixed assets, and it's going to be available to us on our CapEx and depreciation schedule, which is on that sheet. So all I need to do is hit an equal sign in cell B13, and then I'm going to click on my CapEx and depreciation schedule, go to cell C7, which is actually where that amount is for year 1, and link it in. Then, of course, I can make sure that I format it the way I want it to be formatted. So just to make sure that you can fix the format on the first one, and then when you drag that over, it's going to be fixed for the subsequent 3 years. Now, you may have noticed that I don't have anything in cell E, in this case 13, and that's okay because maybe we didn't have any investing activities for CapEx in that year. Now, we're going to go down. After you've calculated CapEx, you're actually going to be able to calculate a category called free cash flow. And free cash flow is basically going to be cash from operations minus any assets. So let's get this category typed in. And then to calculate this, I'm going to go over to cell B15, do an equal sign. I need to take my first year operating cash flow, and I'm going to subtract that from my CapEx. And that'll give me a total. And again, this is something that can be positive or negative depending on, what's been going on with the business. But then we'll copy this over. And then notice that I'm also going to make sure it's formatted as a currency in this case, which it is. Let's talk about the finishing activities inside our cash flow statement. I have a new practice file called Cash Flows Part 3 open. Feel free to use it to follow along. Now you'll notice that down in cell A17 under the financing activities, we've set up 3 new categories. The first one is called debt repayment. This is, of course, cash that goes away, followed by net borrowings. This is an increase in our cash flow. And then you have NCF, which is our net cash flow from financing. Now let's start with our debt repayment. We're going to go ahead and click here. We need this to be a negative value, and it is going to come off the balance sheet. We'll link to it. So after we click, we'll hit the equal sign, go to our balance sheet, come down towards the bottom under our assumptions section. We're going to click in cell C43, our first year of debt payments, but also up in the formula bar, I'm going to go ahead and put a negative in front of that to make it negative when it comes over to my cash flow statement. Then, of course, I'll drag that over for years 1 through 4. I'll get filled in. Now for net borrowing, we're going to get that again off of our balance sheet. It's already there, so all I need to do is click in cell, in this case B19, do an equal sign, jump over to my balance sheet. You'll see that we actually don't have net borrowing for all the years, but we do have it for at least one. We're going to hit that Enter key and then drag that formula over so that it gets brought over to the other cells. And then again, make sure that you have a similar format on all those cells so that you can see what it represents. And just remember that net borrowing represents any new cash that came into the balance sheet. Our next category is to calculate the net cash flow from financing. For this, we just need to total the 2 amounts above. So I am going to come in and put in a border so that we can see that this is a total. And then we're just going to go ahead and sum the 2 amounts in the cells above for debt repayment and also net borrowings. Once I have that total, then I can go ahead and just drag it over to the other cells and we can see that it's all ready to go. The next thing we want to calculate is a category called net cash flow. So I'm going to come down and add this to the spreadsheet. It's not actually there right now. So just type it into about cell A22 and you can format it after it's typed if it doesn't automatically update. Now basically what this is you're looking at the total cash that's come into your business or that's produced in that year. So what I'm going to do is do a sum function where I add up my free cash flow with, in this case, my NCF from financing. Now this can be a negative amount because it's our first year in business, but then it can turn positive as more time goes by. It's time for our moment of truth. We need to now tie our cash flow statement to the balance sheet. For this, what we need to do is take our basic first year cash flow and we're going to tie it to the balance sheet. So to do that, what I'd like you to do is go ahead and go to your balance sheet. And again, we're still trying to calculate our cash that's actually up in row 5. We're going to do an equal sign and get the previous year's, again, cash. And then we're going to add that, go back to our cash flow statement and get our net cash flow. That will give us, again, our cash flow for the balance sheet. This we're then going to copy over. Now, the really important thing at this point is you want to make sure that your balance sheet, again, balances. This is where we're going to come down to that balance check in row 33. And this is what gives everybody a heart attack if it doesn't work, to make sure that the balance check is 0. And this is going to mean that our, again, assets equal liabilities plus equity in every year. And this is the really important thing to check for. Now, at this point, you can go through and clear out any of this formatting that doesn't look right inside your balance sheet and your cash flow statement because you're ready to go. Hi, everyone. I am in the practice file called 3-Statement Model - Final Checkoff. Now, as we get ready to wrap up the making of a 3-statement model, there are a few things that I want to remind you about. Notice that I've gone through the different sheets in our income statement and made sure that in this statement model, I've turned off the extra highlighting. Just remember that highlighting is a way to remind yourself that as you're tying these different statements together, that you don't forget anything. So I've gone through the balance sheet and the income statement and the CapEx and make sure those are turned off. Now, the sheet that I'm going to focus on while we go through this is the final check. This is normally not going to be in your 3-statement model, but these are some things to think about as you're getting ready to wrap up. The big question always comes in, why doesn't my balance sheet balance? And if you remember in the previous lesson, if you go back to the balance sheet and look at row 33, we can see that our balance check is balancing out. This is the big thing that you want to have happen. Now, back on the final check sheet, you're going to notice some common questions that can make it so the balance sheet doesn't work out. The first one is your net income, your P&L linked to your retained earnings? Also, is your cash flow linked to your cash? These are common areas that can cause the balance sheet to not balance. This third one is probably the biggest one. Have you included all your balance sheet accounts in the cash flow statement? If you've forgotten an account like your AP, for example, in your cash flows, your balance sheet is not going to balance. And keep in mind, different kinds of organizations have very different balance sheets. If you have a longer balance sheet, you're going to have a longer cash flow statement. Finally, are your historic financial accounts balancing? They also play into your balance sheet balancing. All these things come together. And again, we can see how amazing Excel is to allow us to have this capability of building such a customized 3-statement model. Hi, everyone. Thank you so much for joining us for this Microsoft Excel for Finance and Accounting course, part 4. In this course, we've explored what a 3-statement financial model is. We've also looked at how to set up the different parts of that model, including an income statement, a CapEx and depreciation schedule, a balance sheet with balance sheet forecast, and don't forget the cash flow statement. Thank you so much for joining us for this Learn It course.